futures slide on rising recession fears. U.S. inventory index futures fell sharply on Thursday, with boom stocks taking the biggest hit, after the Federal Reserve's biggest fee increase since 1994 to tame rising costs fanned worries of a recession. Megacap companies Apple Inc. NASDAQ, AAPL, and Microsoft Corp. NASDAQ, MSFT, fell 3% each in pre-market trading, with NASDAQ 100 futures plunging by using a similar margin. The Fed on Wednesday matched market expectancies through trekking interest prices by using 75 basis points. It also projected a slowing economic system and growing unemployment inside the coming months within the face of the worst inflation in 40 years. We view it as increasingly probable that a recession and better unemployment will be necessary to tame inflation, with any such gloomy macro image looming over the markets, said Gare Lode, head of global equities at Federated Hermes NYSE, FHI, Limited. Following the Fed meeting, Wells Fargo, NYSE, WFC, said the odds of a recession now stand at greater than 50%. The Swiss National Bank raised its coverage hobby rate for the first time in 15 years in a wonder move on Thursday, whilst the Bank of England hiked borrowing charges via 0.25% factor. The S&P 500 is down 20.5% year to date and is in a endure marketplace as traders grapple with a pointy slowdown in boom. The Nasdaq Composite and the S&P 500 indexes were set to mark their 10th weekly decline in beyond 11 weeks. At 6:40 a.m. ET, Dow M&S had been down 601 factors, or 1.96%, S&P 500 M&S were down 91.25 points, or 2.41%, and Nasdaq 100 M&S have been down 375 factors, or 2.84%. On the equities front, Morgan Stanley NYSE MS led losses among foremost U.S. banks with a 2% slide. Twitter Inc. NYSE TWTR firmed 2.6% ahead of Elon Musk's meeting with its personnel after a record said he was anticipated to reiterate his choice to personal the social media organization.